Good evening, and welcome to the Crypto Overnighter. I'm Nicodemus, and I will be your host as we take a look at the latest cryptocurrency news and analysis. So sit back, relax, and let's get started. And remember, none of this is financial advice. And it's 10 p.m. Pacific on Friday, August 25th, 2023. Welcome back to the Crypto Overnighter, where we have no sponsors, no hidden agendas, and no BS. But we do have the news, so let's talk about that. Tonight, we delve into the intricacies of a cybersecurity breach indirectly affecting crypto giants FTX and BlockFi. We'll also be exploring how nCOP Finance is revolutionizing the remittance sector with its new Peso Stablecoin. JPMorgan's latest crypto forecast will shed light on the recent market downturn and how the political spectacle around Trump's resurging NFTs is reflecting on the crypto domain. We'll also be discussing Prime Trust's significant financial setbacks and its implications for the crypto industry. And finally, we'll be looking at how Coinbase's budding relationship with Canadian banks signifies a seismic shift in the banking sector's approach to digital currencies. Stay close. Recently, BlockFi and FTX found themselves indirectly affected by a cybersecurity breach. This breach wasn't directly on their platforms. It involved a third-party claims administration platform named Kroll. Kroll serves as the claims agent for both companies' ongoing bankruptcy cases. They confirmed unauthorized access to specific client data stored on its system. BlockFi was quick to issue a statement. They said their internal systems and client funds remain untouched by this breach. They wanted to inform their clients about this incident proactively. Just a heads up before potential malactors could misuse the information. FTX has faced its share of challenges after allegations of misappropriating customer funds. When they announced the incident on Kroll's platform, they assured that their system and account passwords were unaffected. FTX further stated that non-sensitive customer data of claimants had been compromised. In response, Kroll took steps to contain and address the incident. They are directly notifying affected individuals, providing them with measures to protect themselves. Both companies urged their clients to remain vigilant against potential fraud, phishing attempts, and scam emails that might impersonate parties connected to these security breaches. Because that's what happens every time one of these breaches happens. Scammers crawl out of the woodwork, promising to secure your funds, when really, their intent is to get you to click on one of their sketchy links and then take your money. The timing of this breach is particularly concerning for FTX. As they navigate the complexities of bankruptcy, this breach adds yet another layer of uncertainty and potential disruption to their reorganization process. The significance of this incident is further amplified as it happened just days after FTX's announcement of its intentions to collaborate with Galaxy Digital to manage its substantial crypto holdings. Instead of returning funds to creditors in cryptocurrencies like Bitcoin or Ether, FTX aims to convert its crypto assets into fiat currencies. This strategy is to circumvent potential value fluctuations in the volatile crypto market, ensuring a more stable return for its creditors. However, with non-sensitive email records now potentially exposed, there's a risk that the confidentiality of discussions, negotiations, and strategic decisions within the company could be jeopardized. This could lead to a lack of trust among stakeholders, including creditors, investors, and customers, further complicating the bankruptcy proceedings. While the direct financial assets of these companies remain secure, the breach's repercussions might be felt in the form of eroded trust and potential misuse of personal information. From cybersecurity concerns, we move to Latin America's innovation hub. nCOP Finance is making waves in the remittance sector. But how? Let's explore the potential of the new Peso Stablecoin. And while you're listening, don't forget to hit that subscribe button for daily updates. nCOP Finance is an Argentine-based stablecoin issuer. The firm unveiled its latest creation, a stablecoin named nCOP, which is pegged to the Colombian peso. This move comes as a response to the soaring demand for stablecoins, especially in regions like Latin America. The nCOP is not just any stablecoin, it's designed to revolutionize the remittance sector. Colombia is a country that sees over $6.5 billion in remittances annually. Now it's presented with an innovative way to tokenize these remittances. With nCOP, people can send and receive funds as remittances and even earn a yield on them. This is a game changer, considering the traditional challenges associated with remittances, such as high fees and slow transfer times. But why the sudden focus on Colombia? The answer lies in the numbers. Colombia is among the top recipients of remittances in Latin America, with close to $10 billion flowing into the nation. This presents a golden opportunity for companies like nCOP Finance to step in and offer a more efficient blockchain-based solution. The rise of stablecoins, particularly in emerging economies with unstable financial systems, is undeniable. Valued at approximately $124 billion, stablecoins are gaining traction in places like Latin America and Turkey. These digital assets are not just for trading, they're becoming essential tools for remittances and value storage. nCOP Finance is no stranger to this trend. Before nCOP, they've issued stablecoins pegged to the Argentine peso and the Peruvian sol. Their vision doesn't stop there. They've hinted at future plans to introduce stablecoins linked to other local currencies, such as those of Brazil, Mexico, and Bahrain. Agustin Lacera is the CEO of nCOP Finance. He emphasized the company's mission to offer a fresh avenue for people to utilize nCOP for remittances and to benefit from it. This is not just about providing a new currency, it's about reshaping the financial landscape, making transactions faster, cheaper, and more accessible to everyone. As the world continues to shift towards a more digital economy, innovations like nCOP are leading the charge. They're not just changing how we think about money, they're transforming how we use it. For countries like Colombia, this could mean a brighter, more prosperous future, free from the constraints of traditional banking systems. As we ride the crypto roller coaster, ups and downs are inevitable. JPMorgan's latest insights might just illuminate the path ahead. Interested in where the market might be heading? Stay tuned. And if you're enjoying our analysis, do give us a thumbs up. Both Bitcoin and the broader cryptocurrency market have recently faced a downturn. Bitcoin's value plummeted to a low of $25,600, marking a 10% loss. However, this decline is perceived by many as a mere correction rather than a long-term setback. JPMorgan's latest report emphasizes that the correction and liquidation events witnessed in the crypto markets this month are probably over, hinting at an end to this challenging phase. This sentiment is backed by JPMorgan's analysis of CME Bitcoin futures, which suggests that the unwinding of long positions is nearing its conclusion. Crypto traders had previously established bullish positions due to several positive developments. These include the favorable XRP legal ruling, PayPal's introduction of a stablecoin, and the expectation that the U.S. Securities Exchange Commission will greenlight several Bitcoin ETF applications. Additionally, some traders position themselves ahead of the anticipated Bitcoin halving event next year. However, with these events nearing their conclusion and the fading of previously positive news, there has been a wave of long position liquidations. Despite this, JPMorgan analysts believe the crypto market's downside is limited in the near term. On another note, only 5.8% of the total Bitcoin supply is currently held on exchanges, marking a historic low. This indicates growing trust in Bitcoin as a robust store of value, prompting individuals to transfer their holdings to personal wallets, thereby reducing the amount available for trading and further diminishing selling pressure. The recent crypto market correction aligns with broader corrections in risk assets, such as equities and tech stocks. Factors like frothy tech positioning, rising U.S. real yields, and concerns about China's growth have contributed to this trend. Additionally, news about SpaceX liquidating its Bitcoin holdings in the past added fuel to the fire, acting as a catalyst for the crypto market correction. The SEC's decision to appeal against the district court's ruling in the Ripple case adds another layer of uncertainty. The outcome of this appeal isn't expected until next year. It could introduce a new wave of legal ambiguity for the crypto markets. However, despite these challenges, there's a silver lining. Pantera Capital is a crypto venture fund. They project that Bitcoin's price could soar to $148,000 after the Bitcoin halving event next year. The crypto market has faced its share of challenges recently, but the future looks promising. The resilience of Bitcoin and the broader crypto market, combined with the anticipation of positive developments on the horizon, paints a hopeful picture for enthusiasts and investors alike. From market forecasts to the world of politics, let's pivot to how Trump's NFTs are echoing in the crypto realm. Donald Trump's NFT collections have seen a significant surge in prices and volumes. This surge was particularly noticeable after his interview with media personality Tucker Carlson on X. That interview went viral, garnering 110 million views within hours. The Polygon-based Trump digital trading cards were selling for over 0.13 Ether, or just over $215, up from 0.1 Ether, or $150 the previous week. Trump released this collection last December for $99 each. It features him in styles similar to collectible baseball cards. The collection has over 13,000 unique holders. Those who purchased one of these digital trading cards could potentially win experiences with Trump, such as a Zoom call, a dinner in Miami, or a cocktail hour at Mar-a-Lago. In the recent GOP debate for the 2024 U.S. Republican presidential nomination, Trump, the party's clear frontrunner, chose to skip the debate. Instead, he opted for that interview with Tucker Carlson. Blockchain-based betting platforms like Polymarket and Manifold have been monitoring the odds of various candidates. The platforms allow users to bet on almost anything, providing a unique perspective on public opinion. On Polymarket, it currently costs 71 cents to bet in favor of a second Trump nomination and 32 cents to bet against. Florida Governor Ron DeSantis, once viewed as a significant GOP threat to Trump, has seen a decline in his odds. Meanwhile, entrepreneur Vivek Ramaswamy, a newcomer to right-wing politics, has been gaining traction. He tied DeSantis for the position of frontrunner to challenge Trump. Even though there were two pro-Bitcoin candidates on stage, the subject of crypto and crypto regulations never came up. The surge in Trump's NFTs and the political implications of blockchain betting platforms highlight the intertwined nature of politics and cryptocurrency. The popularity of Trump's NFTs, especially after significant media events, underscores the impact of media on the crypto market. The fluctuating prices of these NFTs reflect the volatile nature of the crypto market, where values can skyrocket or plummet based on current events. The use of blockchain-based betting platforms to gauge political outcomes is a novel approach. While traditional methods rely on polls or pundits, these platforms offer real-time insights based on public bets. In the intricate maze of crypto, not all turns lead to treasures. Prime Trust's recent debacle is a somber reminder. Let's delve into this cautionary tale, and if you value these insights, make sure to follow us for more nightly rundowns. Crypto custodian Prime Trust recently disclosed its financial setbacks in a bankruptcy court filing. The company lost a staggering $8 million due to the collapse of the Terra USD algorithmic stablecoin. Out of this, $6 million belonged to their clients, and $2 million was from the Prime Trust's own treasury. This information comes to us from Jor Law, the interim CEO of Prime Trust. The company's problems really started in January 2021. That's when customers were instructed to transfer funds to an incorrect wallet, a wallet the company couldn't access. To address this, Prime Trust had to shell out $76 million to purchase enough Ether to meet withdrawal demands. So Prime Trust didn't inform their customers of this mistake and the loss. Instead, they chose to try to invest their way out of the problem, spending customer funds to replace customer funds and hoping nobody will notice. Prime Core is the parent entity of Prime Trust. What happened is, in 2018, Prime Core introduced cold storage wallets to manage the storage of Ether, Bitcoin, and other compliant crypto tokens. However, a security lapse was identified with the 98F legacy wallet. That's the wallet that was used for storing customer crypto. They found the wallet could be accessed by multiple signatories. Later, when a customer requested a substantial ETH withdrawal in 2021, it was discovered that crypto assets had been moved to the 98F wallet, which was outside Prime Trust's control. This led to employees using fiat currency from customer accounts to buy Ether to meet withdrawal requests, costing about $76 million. The company's financial health was so concerning that BitGo, a rival custodian, decided against acquiring Prime Trust. This decision was validated when, just 5 days later, Nevada regulators instituted proceedings against both Prime Trust and Prime Core Technologies. The collapse of Terra USD in May 2022 sent shockwaves throughout the crypto sector, signaling a new crypto winter. Despite these challenges, Prime Trust continued its high spending habits. For instance, in November 2022, the company spent $11.1 million against revenues of just $2.7 million. As we near tonight's end, let's head north to Canada. Traditional banks and crypto giants are forging new alliances. What does this latest move by Coinbase signify for the future of finance? Let's find out. Coinbase is in active discussions with top-tier Canadian banks. This collaboration aims to back cryptocurrency and promote its adoption. The move signifies a significant shift in the banking sector's approach to digital currencies. The partnership will allow Coinbase to offer its services to a broader audience, tapping into the Canadian market's potential. The exchange is working closely with these banks to ensure a seamless integration of cryptocurrency services. Coinbase's CEO, Brian Armstrong, has been vocal about the importance of this collaboration. He believes that working with these banks will bridge the gap between traditional finance and the crypto world. The CEO stated that this partnership would enable more people to access and benefit from the crypto economy. The Canadian banks involved have not yet been named, but they are among the country's most prominent financial institutions. This partnership is expected to bring about a significant change in the Canadian financial landscape. The Canadian banking sector's decision to work with Coinbase is a clear indication of changing tides. It's a move that will undoubtedly have ripple effects across the global financial landscape. As more banks open their doors to cryptocurrency, it's only a matter of time before we see a complete transformation in the way we view and use money. This partnership is a significant step in that direction, paving the way for a decentralized financial future. So, what happened? BlockFi and FTX found themselves linked to a cybersecurity breach via a third-party claims administration platform, Kroll. While their financial assets remain secure, this breach could lead to a potential misuse of personal information and an erosion of trust. Finance, based in Argentina, released a stablecoin named nCOP, pegged to the Colombian peso. This stablecoin aims to revolutionize the remittance sector, making transactions faster, cheaper, and more accessible. The crypto market, including Bitcoin, has seen a recent downturn. However, JPMorgan's analysis suggests that this is a short-term setback. Despite some recent challenges, the overall forecast for the crypto market remains optimistic. Trump's NFT collections have surged in value, especially following a viral interview. The rise of blockchain-based betting platforms is also influencing political predictions, signaling the growing influence of cryptocurrency in broader societal events. Prime Trust disclosed its financial setbacks, including an $8 million loss from the Terra USD algorithmic stablecoin's collapse. This highlights the importance of robust financial management and transparency in the crypto sector. Coinbase is in talks with top-tier Canadian banks to promote cryptocurrency adoption. This collaboration signifies a major shift in the traditional financial sector's approach to digital currencies, hinting at a decentralized financial future. And that's going to do it for us tonight. I want to thank you, my listeners, because when you stop listening, I will stop talking. If you enjoyed tonight's show, then please like, follow, subscribe, leave a rating, or maybe a review. And in the meantime, we'll see you tomorrow night.